Hello, I'm Finola Burke from Research as a Service, and welcome to our 2022 Outlook series. In this session, we're focusing on Broadline Wholesale Distribution Group, Stealth Global Holdings, ASX ticker SGI, and joining us is Managing Director Mike Arnold and my colleague John Burgess. Welcome to you both, and thank you for joining us.
Thanks, Finola.
John, I'm going to let you kick off with the questions, and we'll go from there.
Thanks, Finola. Mike, in the last 12 months, you've integrated two businesses, Skipper Transport Parts and C&L Tools. I'd be interested in your comments on whether those two businesses sort of met your due diligence work when you looked at them, and then what learnings you've taken out of those two acquisitions for the greater business.
Yeah, well, we have a pretty, I guess we've completed 5 acquisitions so far, with the 6th one are coming. We have a pretty strong M&A blueprint now, and it's all about building blocks or building more muscle. From a strategic perspective, we've really looked at 5 key priorities around scale and leverage, building a network, obviously. The financial value is really important to that, as well as the quality of the people. So we've always taken the view of undertake small M&A deals that will add big value by having a larger consolidated group. And we're probably at that point now where our revenue is about 100 million. Have they met expectations? The C&L acquisition has absolutely been a burster on many fronts, from a people perspective to operational growth, as well as from a sales point of view. And its net profit is up by about 35% since we acquired it in the last 12 months. That's been fantastic for us, and also given us a point on the east coast of Australia that we've been able to distribute from. The Skipper Transport Parts deal is slightly different in that we had to integrate that onto our ERP system, which was the first acquisition we've had to do that with. And the benefits that's come along with that, we've identified, has improved other parts of our business. And so we've been forced to, I guess, look at different ways in how the ordering patterns of customers are, or how we feed the branches, or our inventory reviews. And in doing that, we haven't been forced or pushed to worry about external factors and the noise around that. We've really just taken our time now at the 6-month mark, moving from operational phase. So the benefits there have been actually really good from a systems and a people perspective.
In terms of general trading, and you can say what you can, but obviously the last 2 years for most businesses have been, have been varied, a lot of disruptions and so on. What are you seeing? What trends are you seeing currently? You're seeing some stabilisation in those sort of trading patterns, particularly for the core Heatley's business.
So our trading in the last 12 months, say calendar year 21 versus calendar year 20, is up from an organic perspective. So that's outside the acquisitions, and all acquisitions have been a revenue growth for us. I guess there's a couple of factors for our business. One is the demand for the type of product that we sell in everyday environment, particularly around safety, the PPE, and the general consumable items has been really, really strong. And that's because of COVID and I guess some of the influences around that. Our key business model, or the customer offering, has advanced, and our implementation of the e-commerce systems has allowed us to put a solutions model in place as well. So we've invested heavily in both those areas, and the outcome of doing that has allowed us to pick up about $18 million worth of new business in contracts that for the first time they've been won in Australia. And we reported that around about 3 months ago. And those contracts have just started in its infancy of implementation. And so winning new contracts has been really key, but offering more value to customers, I think, has allowed us to take a stronger position in the market, not only from a geographical perspective, but also how we've built our capability. And I guess we reviewed that quite heavily almost 2 years ago when COVID came in, and we knew that our model needed to continue to be enhanced, and we've taken the opportunity to do that in that time.
Just the other sort of thing we're seeing at the moment is inflation. Well, there's two things really: inflation and supply chain costs, which are sort of intertwined. What are you seeing on the inflation front in terms of the products you sell and your ability to pass that inflation on? And I guess as a general comment, is it good or bad for the stealth business, inflation?
Well, I guess a little bit of inflation is actually healthy for our economy. There's a lot of recent reports, obviously because of our inflation and the US inflation. In Australia, there's been a lot of bottlenecks through supply chains and still continue to be that way. And that's obviously driven by strong demand and also underpinned by government stimulus and housing building costs, as well as vehicle prices. Unfortunately, that's all been really good for us because the products that we sell are absolutely aligned to those types of industries. But on the flip side, the labour market has tightened. Wages growth, particularly in Western Australia and Queensland, is increasing as unemployment's obviously decreasing. Interest rates will rise in the future period based on recent reports. So I guess we need to make sure that we remain competitive and we have good product prices, we have a wide range and stocks available. So as supply chains obviously become slower, we need to make sure we've got the right stock in the right location at the right time, so our inventory costs may go up. However, based on that demand, we also see that our sales activity will go up and we've got the product that's available. I haven't seen that all our products have increased in its totality. There are certain sections of our categories that have increased, and we engage closely with our customers in terms of making sure the impact on them and also the impact on us is minimised. But we've been fairly consistent over a number of years now in terms of our margin levels and how we engage with customers who are long-serving. So I think everybody's expecting that there will be some cost increase. But equally, you know, I'm reading reports that in 6 to 12 months, supply chains will improve, the backlogs will diminish, and maybe that will have the opposite effect. So maybe any immediate inflammatory rise is short term.
And Mike, just lastly, what opportunities do you see for further consolidation in the wholesale distribution market?
We're seeing quite a bit. I saw this in the logistics area probably about 15, 16 years ago, where you've got a couple of majors and you've got a whole stream of minor operators. So the bigger getting bigger and the smaller are finding it hard to be competitive. And I think what we've done with our acquisitions has allowed ourselves to be positioned in between the majors and the minors. I think there will be more consolidation, and it's good for companies like us who are on fast growth pathways, as well as we think that every time we've done an acquisition, we've enhanced the way that we integrate them. The people factor has been really key. So I think there's some definite consolidation that will occur over the next couple of years in our market for sure.
Well, Michael, we're looking forward to checking back with you through the course of 2022 to see how Stealth Global Holdings is progressing. Thank you for your time today, and thank you, John Burgess, for joining us as well.
Thanks, Arnold. Thanks, John.